It is the 6th of February 2023. My name is David Hickson, and in today's market update we're going to be taking a quick look at the SPX or S&P 500 and gold and also Bitcoin. Just a quick reminder that I've started recording what I call Hurst Cycle's geek updates for those of you who are interested in the details or the nitty-gritty of how one performs a Hurst Cycles analysis and the various tools that we use. And so I'm able to make these general market updates a little bit quicker, and I'm not focusing so much on the details. If you find yourself hungry for the details, then make sure you check out my recent geek updates. Let's start with the S&P 500, and I'm not going to repeat everything I've said in previous market update videos because you can, of course, go and find those videos for yourself. And so I'm going to get straight to the point. You will know that recently we have been discussing and debating the magnitude of this trough in October and the forthcoming trough that we are expecting towards the end of February or perhaps in early March over here. I have hidden the longer cycle markers because at the moment I believe it is best to focus on this 20-week cycle, which certainly formed in the middle of October. As I've mentioned in previous market update videos, that might have been a bigger magnitude cycle trough that formed over there, particularly because we have, since that trough, witnessed some bullish cycle shapes unfolding. In particular, there is this bullish shape that occurred between the middle of October and the third week of December. And of course, the recent market action has been even more bullish, with price accelerating up to a high point that formed last week. In recent update videos, I calculated a target of 41.29, I believe it was, which was of course achieved last week on Wednesday or perhaps on Thursday, and price exceeded that target, went a little bit beyond it, almost to a level of 4,200, and then on Friday it turned down again. So what are we expecting next? Well, of course we have this 20-week cycle trough over here towards the end of February, and so we need to ask ourselves, has this peak actually formed, or is the market going to keep moving higher? And once that peak has formed, we are of course expecting price to move down into the 20-week cycle trough towards the end of February. So first of all, let's tackle the question of whether that peak has actually formed. And in order to confirm a peak, we use our Hurst Cycles tools. The first indication that a peak has possibly formed is the fact that price has exceeded the target levels that we calculated in previous market update videos. Now, when a target level is generated on the basis of price crossing an FLD, for instance, we don't necessarily expect price to stop dead at exactly the target level. If price exceeds the target level slightly, it indicates more bullishness than might have been expected in the market. And if price fails to achieve the target, it indicates less bullishness. And so the fact that those targets that we calculated recently have been achieved gives us the first indication that a peak might have formed. The next thing we will do is take a look at our VTLs, and if we zoom in here, you will see that we have a 10-day VTL and a 20-day VTL. Now, when price crosses down below the 10-day VTL, that would confirm that a peak of 20-day magnitude has formed. That's not a very impressive sized peak, but you must bear in mind that the 20-day cycle peak will probably also be synchronous with a greater magnitude cycle peak. When price crosses down below the 20-day VTL, it will confirm that a peak of the 40-day cycle has formed. And that is going to be very useful to us because the most recent 40-day cycle trough is a fairly convincing one over here in the third week of January. And so if a 40-day cycle peak has formed, that would mean that price is on its way down to the next 40-day cycle trough, which of course, due to Hurst's principle of synchronicity, means that the 20-week cycle trough is also going to form at the same time. And so we will be watching those VTLs for evidence that the peak has formed and that price is on its way down to the 20-week cycle trough. The other Hurst Cycle tool that we will use to confirm that a peak has formed is of course the FLD. And here we have 3 FLDs displayed, one for the 10-day, the 20-day and the 40-day cycle. These FLDs are beginning to form what Hurst called a cascade pattern. The idea behind a cascade pattern is that as price crosses down below each FLD, we can of course project a target. Now I should point out that price has not yet crossed the 10-day FLD, but let's assume for the sake of this argument that it does cross the 10-day FLD today. That would mean that the crossing point would be about there, just above a level of 4100. That would project a target which would take us down to a price level of about 4000. On its way to achieving that target, it would of course cross the 20-day FLD. And in crossing the 20-day FLD, depending where and when it does that, we would be able to generate another target to the downside. We can't, of course, generate that target yet because we haven't seen it crossing the FLD. But the idea behind a cascade pattern is that when the FLDs are lined up in this way, we can anticipate the fact that as price crosses each FLD, it will then also cross the next FLD in the sequence of aligned FLDs. And so we might assume that the 40-day FLD will also be crossed, projecting price even lower. And so we will be watching this potential cascade pattern as price confirms that the peak has formed and starts moving down towards the 20-week cycle trough. Another interesting FLD to keep your eye on is the 20-week cycle FLD, because if the magnitude of the trough in the middle of October is of greater magnitude than 20 weeks, then we might expect the 20-week cycle FLD to provide a level of support. If you don't understand why that is, then let me explain very quickly. Price has a tendency to interact with the FLDs of all cycles following a regular sequence, and if the magnitude of this trough is of higher than 20-week, then we would expect the sequence to start from that point. Let's view this chart on a weekly basis. There we go. That's a better way of considering the 20-week cycle FLD. And so our first interaction would be an A category interaction, which would generate a target to the upside, a target as a matter of interest that has not yet been achieved. And around about the time that the 20-week cycle trough forms, which is of course the trough that we're speaking about, price moving down into, we would expect the 20-week cycle FLD to provide some support. That would be in a B and C category interaction pair. As a matter of interest, we do often get a double BC category interaction between price and the FLD, and that would occur at the shorter cycle trough, which would seem to be what has been happening since the third week of December, with the 20-week cycle FLD providing support all the way up. This is yet another reason why it seems likely that the magnitude of the trough in October was of higher than 20 weeks. Now let's take a quick look at gold, and in my recent market update about gold, I also projected some targets on the basis of price crossing FLDs. I would encourage you to go back and take a look at that video, and I have also recorded a geek video recently about how to calculate those FLD targets. They are very powerful, and if you're interested in the details, please go and take a look at that video. I calculated a target, if memory serves me correctly, of between 1945 and 1975 for the peak that gold was moving into. And you can see that gold has probably formed this peak over here at a level of almost 1960. I'm showing the peak analysis on this chart because you will know, if you've watched any of the previous market updates about gold, that I believe that gold responds very clearly to cycles that are synchronized at their peaks, and that a trough analysis is usually a more difficult analysis in gold. However, it is an interesting instrument because there are periods of time where the trough analysis just seems to fall into place, and that has been the situation recently, because we have a very high magnitude trough, in my opinion, that formed in either September, October or November of last year. I say either one of those times because you can see that we had three almost equal troughs that formed over this period. There are many Hurst analysts that would choose to place the 54-month cycle trough over here in early November, and that is why I have two bar counts at the foot of the chart. The one bar count of 131 days is measuring time from the first one of those troughs at the end of September, which in my opinion is probably the better time for that that 54-month cycle trough to have formed. But the other bar count of 95 days is measured from the third one of those troughs in early November, which could also have been the correct placement for that trough. The important thing, of course, is that in gold we are also expecting price to drop down into a 20-week cycle trough. Now, of course, if the magnitude of this trough towards the end of last year was as high as I think it was, of 54 months and potentially even higher, then the drop down into the 20-week cycle trough might not be a very dramatic affair. In other words, it might not drop very far down, because following a very high magnitude cycle trough, we would expect a good deal of bullishness in this market. As a matter of interest, if we display the 80-day cycle VTL, which is this blue line over here, we can confirm that the peak of the 20-week cycle has formed. The reason for that is because when price crosses down below the 80-day cycle VTL, it confirms that a peak of a cycle 1 degree greater in magnitude, in other words, in this case, the 20-week cycle, has formed in the market. And so the 20-week cycle has definitely formed a peak, and we are now on our way down to the 20-day cycle trough. The average length of a 20-day cycle, as discovered by Hurst 50 years ago, is 136 days. And so that is why I am keeping an eye on both of these bar counts over here. According to the possibility that the trough formed at the end of September, we have only 5 days to go until we have achieved an average length 20-week cycle. According to the other possibility that the big magnitude cycle trough formed later in early November, we have 40 days to go. If we take a look at some FLDs, and let me zoom in here so we can see a little more detail, you can see an example of a pattern that is not, in fact, a cascade pattern, because price crossed down below the 20-day FLD, projecting a target below the 40-day FLD, which was, of course, achieved. As it crossed below the 40-day FLD at that level over there, it projected another target to the downside, which I think was 1860, and that was fairly accurately achieved at the end of trading on Friday. The reason this is not a cascade pattern is because when price crossed below the 40-day FLD, it does not project price to go below the level of the 80-day FLD. This is what Hurst described as an FLD gap zone, because there are gaps between the FLDs, and when price enters into a gap zone, you will often find that the strong move, whether it's upwards or downwards, tends to pause in its downward movement. It's as if though it has lost the cycle impetus as it enters into the gap pause zone. Of course, for the 20-week cycle trough that is approaching, we might expect, for the same reasons as discussed when looking at the S&P 500, that price could find support at the level of the 20-week FLD. And so the 20-week FLD is certainly a level that we are going to be watching with some interest. But considering the very high magnitude trough that I believe formed at the end of last year, it would also not be a big surprise to find that the 80-day cycle FLD actually provides support. And so I will also be watching the 80-day FLD as price comes down here to see whether gold might find support at the level of that FLD in the process of forming the 20-week cycle trough. Finally, let's take a look at Bitcoin, and I'm showing both the trough and the peak analysis here. You will know from previous market updates I've recorded about Bitcoin that it's a very interesting instrument. First of all, it obeys Hurst Cycle principles absolutely perfectly. We find many examples of absolutely exact cycles forming in Bitcoin, and it is a particularly interesting instrument because of the fact that we find those examples both in the trough analysis and in the peak analysis. The important thing about Bitcoin is that it is rising out of a 54-month cycle trough, which I have discussed in previous updates about Bitcoin. And so if you are not aware of this analysis, I would encourage you to go back and take a look at those recent videos. And it is, of course, rising up into the next 18-month cycle peak. I've been counting the number of bars since the 54-month cycle peak formed in November 2021. And you can see there have been 451 bars or days since that peak. The average length of an 18-month cycle is 546 days. And so we have a few months ahead of us before that 18-month cycle peak is likely to form. Zooming in and taking a look at the detail, you can see an interesting thing has happened with the peak analysis recently. If we measure from the 40-week cycle peak over here in August of last year, we have a long 80-day cycle of 82 days into November of last year. And then, let's just zoom in a little more over here. You can see that we have what I call a floating circle and whiskers, where we have the circle for the 20-week cycle peak floating above a stack of diamonds, or in this case triangles, because they are marking the positions of the cycle peaks. In other words, there's a missing cycle in there. Where's the 80-day cycle? The 80-day cycle is all the way over here. The reason it has been displaced to the right in that way is because of the fact that this cycle peak has been positioned over here. I should point out that, of course, this strong move down was because of the FTX news events, which caused a tremendous amount of volatility, of course, in crypto prices. And so we had a news-induced price movement, what Hurst would have described as fundamental interaction. And so we need to call into question the position of that 80-day cycle peak. It is quite possible that the 80-day cycle peak would have been better positioned earlier. When I see a floating circle like that, it is often an indication that, in fact, the peak or the trough in question should really be positioned there, but because of the analysis of the shorter cycles, it simply hasn't worked out in that way. And so it is quite possible, in my opinion, that the 20-week cycle peak would be better placed over here in the middle of December last year. That would mean that the peak that is forming now, or has recently formed, is probably not of 20-week magnitude. You can see I've been counting the days there. 171 days is very long for a 20-week cycle. It is more likely that this is a peak of only 40-day magnitude, or possibly 80-day magnitude. The important message in the peak analysis is this 18-month cycle peak over here, which you can see is expected in about April. So that is really our target time for a peak in Bitcoin. In the meantime, we have a very regular trough analysis. As is the case with the other instruments we've been looking at today, we have a potential peak that has formed in Bitcoin. Price is now moving down into a 20-week cycle trough, which is expected towards the end of March. If we zoom in a little more and take a look at the detail of the trough analysis, you will see that the 80-day cycle trough has been positioned over here in the middle of January for this very small move down. It is just possible that that is not a good placement for the 80-day cycle trough. However, the neat nest of lows over here with these very well aligned circles and whiskers tends to indicate that it is likely that the 80-day cycle trough has formed, and that the next trough of importance is this one, the 20-week cycle trough towards the end of March. Of course, Bitcoin price has been distorted by news events such as the FTX debacle, but nevertheless the cycle picture is beginning to shine through again, and as price action unfolds, we are gaining greater clarity and we can update our analysis accordingly. There is one other thing that I should point out, which is that the whisker of the 18-month cycle peak is already overlapping price. It extends back to the beginning of this year. And so we do need to stay on our toes in terms of the potential early formation of an 18-month cycle peak. But as mentioned, there are over 90 days still remaining to this 18-month cycle if the 18-month cycle peak is going to come in on time. And so in conclusion to today's market update video, each of these instruments is in the process of forming a fairly big peak and starting the move down into a trough of 20-week magnitude. I do hope that you found this market update useful and interesting. If you have any questions, please join us on our Discord server or ask your questions in the comments below this video. I look forward to hearing from you.